Welcome back. You're watching Big Deal, and Alka Banerjee is right here with us. So, Alka, talk to us about the geopolitical tension all across. That's been having a huge impact on all the types of investment destinations, all types of markets globally. What is the view coming in from there? How is your business developing in such a situation?
So, Nisha, it's a very interesting time. We have a lot of geopolitical uncertainty. We have a Brexit coming up where nobody really knows how this will play out in terms of trade policies, trade rules, whether trade will increase, decrease, and what kind of migration and immigration of people it will impact. We have the Middle East situation, which is a very, very sensitive issue right now, and we don't know whether this can lead to much worsening of the situation or how it will be controlled. And then we have the US elections, which were a big surprise for a lot of people. But again, those elections reflected the underlying insecurity and nervousness of the US population, which felt that thanks to all the migration of jobs and the global offshoring scenario, they were being left largely outside the global development scene. And they were being presented with no future, no jobs, and nobody seemed to care for them. So that election actually highlighted that insecurity and how important it has become. So at one end you have extreme globalization where you can manufacture or create anything anywhere in the world and ship it to anywhere in the world. And the other end you have this pushback against it and saying, what does it do to me? Where does it leave me? So all of those tensions are coming together, and that creates uncertainty. President Trump's election gave a big boost to the stock markets in the US, and because the idea was that he will actually help to rein in some of those concerns or address some of those concerns. Whether they will finally eventually address the real issues, we don't know, but the concerns were being at least talked to. So President Trump's election brought about that big boost in the US stock market. We also have Brexit, which again, how will it impact other emerging markets and their trade? We've had falling commodity prices for quite some time now.
Yes.
Some of it is because of lower demand from China. Some of it is also because US has been going into the alternative energy route for a long time. We have shale gas, which is a big alternative for it. And also other countries now focusing on solar in a big way and other alternative forms of energy. So all of these things are creating a certain situation of extreme uncertainty, which may bring up a different set of winners and losers over time. But this is also a wait and watch period in that sense.
Oh yes, but no matter how much rule-based investment you do and indexation you do, but these are certain risk factors that you really cannot foresee, isn't it?
So geopolitical risk, I think, always very uncertain, and it's very hard to factor that in your investment. But I think that applies to both active and passive. Passive simply tries to make it transparent and also gives you the variety of options in different ways. That, okay, I think my world is very uncertain, very volatile, then maybe I'll take a low vol index, which will be better off in a very highly volatile market. Or I think this economy will benefit from low commodity prices like India. So then you can bet on the Indian economy because it's seen a lot of growth thanks to the low commodity prices.
All right. So do you see this particular bet really gaining traction in India in terms of passive investments going forward? A big
Absolutely. As we talked about in the beginning, EPFO itself has put in more than 20,000 crores in this space. CPSE ETFs, which was initially 3 years ago, we had a small one, but now has gathered 7,000 crores, and they're going to come out with even more such products. So those are both big initiatives of the government of India.
So far, only government has looked at it, the private sector also.
Well, the private sector, because the government is pushing so much money, the AMCs know they have no choice but to step into this space because the amount of money that's coming in through the government cannot really be matched very easily by the retail segment. So every asset manager who had sworn themselves to be active fund managers are now opening a separate passive group which will focus on ETFs and passive investment. Again, this is a global trend. So it's not that you may be at a nascent stage right now, but in 5 years the situation will be very different.
All right. Let's hope for that, and all the best for that. Thanks so much, Alka Banerjee, for spending time with us here at CNBC. Thank you so much. So we'll slip into a short breather, but remember, private equity exits have really given stupendous returns. We'll talk more about that when we return with Sanjeev Krishna of PwC. Stay tuned to Big Deal.